Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 37, published on July 31st, titled Best Renewable Energy Stocks and ETFs and More, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content, including stock symbols and bonus material, at this episode's podcast page located at investingforthesoul.com/podcasts, and Google any terms that are unfamiliar to you. I start with the recommendations of usnews.com piece that I found on the wtop.com site. It's titled 7 Best Renewable Energy Stocks and ETFs. Here are the recommendations, each followed by a brief quote from the article. 1. Invesco Solar ETF offers exposure to global technology and utility stocks that can benefit from demand for solar. The Invesco Solar ETF tracks 24 solar energy companies such as First Solar and Solar Edge Technologies. Since Invesco Solar ETF owns fewer companies, the price can be more volatile than other renewable energy funds with a larger number of companies. 2. iShares Global Clean Energy ETF. This ETF tracks the S&P Global Clean Energy Index and includes companies that produce solar, wind, and other renewable power sources globally. 3. NextEra Energy is a utility company that owns Florida Power and Light Company and Gulf Power Corp, along with wind and solar assets. NextEra Energy trades at a 50% premium compared with regulated utilities on 2022 price to earnings, implying that investors are willing to assign a significant growth premium to the management team, says Michael Underhill, Chief Investment Officer at Capital Innovations in Wisconsin. 4. An old favorite, Vestas Wind Systems is a Danish company that designs, manufactures, and installs wind turbines globally, and has more than 115 gigawatts of wind turbines in 81 countries. As consumers migrate towards renewable energy sources, it may change the composition of inflation, reducing the power of traditional oil and energy to hedge inflation. So investors will need renewable energy to hedge against inflation in the long term, says Jody Gunsberg, Managing Director, Chief Investment Strategist at Morgan Stanley Wealth Management Institutional. 5. Brookfield Renewable Partners. Brookfield Renewable Partners is a global renewable power platform with 19,300 megawatts of capacity and 5,288 generating facilities in North America, South America, Europe, and Asia. The company is one of the largest owners of renewable assets globally, 75% which is hydro, and generates a 4.5% dividend yield with a 5% or higher dividend growth. 6. Iberdrola is a Spanish utility company that owns wind assets. The company announced in June that it will invest $4.5 billion during the next 4 years in France to develop renewable energy, including onshore wind, solar photovoltaic, and offshore wind capacity auctions. The company is a best-in-class wind developer company, Underhill says. 7. Alps Clean Energy ETF invests in the CIBC Atlas Clean Energy Index, a benchmark index. The 3 top holdings are Cree, Tesla, and Enphase Energy as of May 31st. End quotes. Continuing on the subject of renewable energy, Scott Levine has written a post on the Motley Fool site titled, "Better Buy, Plug Power versus Canadian Solar." Here are some quotes that might interest you concerning his discussion. Skyrocketing more than 180% year to date, shares of Plug Power have soared in 2020, extending the 149% run-up they experienced in 2019. Why? Primarily, investors are growing more confident that the company is on track to meet management's 2024 projection of generating sales of $1.2 billion, operating income of $170 million, and adjusted EBITDA of $200 million. Fortifying its position as an industry leader, Plug Power completed 2 acquisitions in June that will help the company become a formidable competitor in hydrogen generation. Unlike its bankrupt peers, Canadian Solar has prospered over the past 2 decades, and investors are confident that plenty of sunny days remain. The company's supporters will also point to Canadian Solar's burgeoning energy business, which deals in the development of solar power projects. Currently, it has 1 gigawatt peak in operation, with 3.7 gigawatt peak in backlog and 12 gigawatt peak in the pipeline. Additionally, Canadian Solar's focus on the energy storage market is also a source of enthusiasm, since the company has 2,820 megawatt hours of storage projects in the pipeline. For Plug Power, which is unprofitable and doesn't generate positive operating cash flow, the traditional valuation metrics are unhelpful. Instead, we can assess the stock in terms of sales, and in doing so, we find that it trades at a multiple of 9.4, well above its 5-year average ratio of 3.6, and considerably higher than the S&P 500 price to sales, 2.3. Plug Power seems to be too richly valued at this point. Canadian Solar, on the other hand, currently represents a bargain. Shares are trading at 2.3 times operating cash flow, which is a discount to its 5-year average multiple of 4.1. End quotes. The next article is by a Zacks analyst, familiar to you in these podcasts, Nitish Marwah. His latest post is titled 4 ESG Funds to Buy for Purpose and Profit, and can be found on nasdaq.com. As usual, I'll say the fund name and follow it with brief comments by the author. 1. New Alternatives Fund Class A invests in companies that contribute to a sustainable environment. The fund seeks long-term capital growth with income as its secondary objective. The New Alternatives Fund Class A has a Zacks Mutual Fund rank number 1. The fund has 3- and 5-year returns of 10.4% and 8.4% respectively. 2. The TIAA-CREF Core impact bond fund retail class invests the lion's share of its assets in bonds while favoring long-term total return through income and capital growth. The fund gives special consideration to companies that satisfy its ESG criteria. The TIAA-CREF Core Impact Bond Fund retail class has the Zacks Mutual Fund rank number 2. The fund has 3 and 5 year returns of 4.6% and 3.9% respectively. 3. Fidelity Select Environment and Alternative Energy Portfolio Fund aims for capital appreciation. The product invests the majority of its assets in securities of companies that provide business services related to alternative and renewable energy, energy efficiency, pollution control, water infrastructure, waste and recycling technologies, or other environmental support. The Fidelity Select Environment Alternative Energy Portfolio has a Zacks Mutual Fund rank number 2. It has 3 and 5 year returns of 2% and 6.4% respectively. 4. PAC's Elevate Global Women's Leadership Fund Individual Investor Class seeks returns on investment that exceed the price and yield performance of the PAC's Global Women's Leadership Index. The fund has 3 and 5 year returns of 6.9% and 7.4% respectively. End quotes. Now, Tim Nash, publishing on the Corporate Knights site, has another outstanding analysis. He reviews 2 Toronto Stock Exchange ETFs in an article titled, How Sustainable Are Wealthsimple's New Socially Responsible Funds? Now, as ETFs, they're generally available for purchase globally. Here are some of his remarks. I wasn't impressed when Wealthsimple launched its first socially responsible portfolio in March 2016. Wealthsimple's updated socially responsible portfolio is chiefly made up of 2 new ETFs. The Wealthsimple North America Socially Responsible ETF, that includes Canadian and US companies, and the Wealthsimple Developed Markets ex North America Socially Responsible ETF, that includes companies from Europe, Japan, and Australia. The new ETFs explicitly exclude weapons manufacturing, defense contracting, tobacco, alcohol, adult entertainment, and any company found to be in violation of the UN Global Compact, principles covering human rights, child labor, and corruption, etc. The new funds also exclude companies related to oil, gas, and coal, making them fossil-free. Does the new portfolio, as advertised, let people invest in a better world? Well, not quite, but the portfolio has lackluster exposure to companies whose main business is providing sustainable solutions, such as renewable energy, electric cars, green buildings, and energy efficiency, all themes that are outperforming with good long-term growth prospects. For the time being, investors who want to invest in sustainable solutions will need to incorporate additional products like green ETFs or community bonds if they want their investment to have a positive impact. End quotes. Finally, for those of you new to ethical and sustainable investing, particularly if you're an American, check this out. US SIF Foundation launches Sustainable Investing Course for Individual Investors. Quote, the course, which takes approximately 30 minutes to complete, provides a brief overview of the development of sustainable investing and summarizes the investment options and strategies available. End quote. However, If you want help creating an ethical and sustainable portfolio, do see my DIY Ethical Sustainable Investing Pays tutorial. Well, these are my top news stories and tips for this podcast, best renewable stocks and ETFs, and more. And to get all the links, stock symbols, and more, or to read the transcript of this podcast and with additional information too, please go to investingforthesoul.com/podcast and scroll down to this episode. Also, be sure to click the like and subscribe buttons in iTunes, Apple Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. That way you can help promote not only this podcast, but ethical and sustainable investing globally. We can all do our part in helping create a better world, especially in these deeply troubled times. Contact me if you have any questions. Stay well, healthy, and wise. Thank you for listening. All right, so talk to you again on August 14th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.